Good evening, traders. Thomas DeLello here. One of the top 5 things that successful traders do consistently is actually something that they don't do. They consistently know when not to trade. And here we are, guys. We are on the eve of rollover. Tomorrow, Thursday, September 13th, is going to be rollover period in the S&Ps. There's a couple days where we start to get some mixed signals in the market from the contract rolling over from the September contract to being the front month to the December contract being the front month. So, really for the most part, it's tomorrow being Thursday and Friday, which are the most difficult to trade. But, here's the thing, guys. You have absolutely no control over any market, and you don't have any control of the amount of profit that you can make, if any, but there's one thing that you can control each day in every single trade that you enter, and that control is the key to trading successfully over a lifetime. And that one thing that you can control is risk. More money is lost by trading at times when we shouldn't be in the market than any other time. When risk is heightened, or maybe opportunity isn't quite as clear, or we don't have as much of an edge as we usually do. Tomorrow, Thursday, Friday, another day. These are 2 days where that couldn't be any more true. Let's put it that way. We have a lot of cross currents going on from traders closing out positions on one contract, reinitiating them in the other contract. It's a day or 2 day period where I already know, at least as far as the S&Ps, trading the S&Ps on those 2 days, my trading is going to be very limited, maybe none at all on those 2 days. And that's something that I know ahead of time. I know professional traders that have been in the market for 20 years that don't trade during rollover. Doesn't mean you can't trade all the markets, but as far as tomorrow goes, as far as Friday goes, it's going to be riskier, heightened risk conditions trading the S&Ps. And, as you mature as a trader, you begin to realize that consistency in the market, it's not achieved by high activity. It's about limiting your trading to those times where you feel like you have probabilities in your favor, where your edge is overwhelming and your risk can be defined. And, if you accept that trading is just a numbers game, which you have to be a successful trader, and each trade is random, over time you're going to make money as long as you're managing risk properly. And again, assuming you have some kind of an edge. So a big part of managing a risk properly is to know when not to put your money at risk. Keep your money in your account. Money not lost, in my mind, is like money gained. And as far as tomorrow goes, as far as Friday goes, I'm not going to be risking a lot of capital, if at all, trading the S&P markets. So be careful out there, guys. Roll over again Thursday, roll over Friday. By the time Monday, Tuesday comes along, things should be getting a little bit more back to normal, so to speak. Have a great night. Trade patient. Trade well, everybody.